and the Nifty struggling to stay above. I just want to pull up the line graph of the day to show you what kind of a day we've had and what the advanced declines are looking like. So a number of theories out there on why we've seen this nervousness in the market. Off the day's low, which was 22,232, but still trailing quite a bit from the day's high. Let's pull up the advanced declines in the line graph there. So one of the theories is that perhaps after most of phase 3 is done, there is an expectation that the BJP's victory margin might be lesser than what was first expected, which is why you're seeing this choppiness in the market. And the line graph, best place to actually depict it visually. You're seeing the choppiness in that market, the advanced decline gap yawning a bit more now, narrowed slightly, but still pretty tough day. Let me just pull up the heat map to get you a sense of where the pain points are. And you're seeing it in a Bajaj Auto. Now, profit booking there earlier. Tata Motors, Bajaj Auto, the auto pack there. After really running up, now seeing profit booking coming in. Hindalco, which was a big gainer in the morning, has also seen that. M&M doing fairly badly. But I think this is a tale of two extremes, because you have to look at what is happening here. I mean, after a long time, you would see this kind of a response to FMCG stocks of all things. We were having a conversation early in the day with Andrew Holland, and he described this set of companies as unloved by the market. Well, they've definitely found the love. And HUL 5% up. Remember, it was Britannia yesterday, almost 7.5%, 8% up. Second consecutive days of gains. Just look at that top row. It is FMCG and IT. Defensive play on both ends. So in HUL, Britannia, Nestle, the top three all in the same pack, and IDC doing very well. Tech Mahindra, TCS, Infra follow the rest. Kotak Mahindra, okay, maybe you're having a sort of a technical bounce back after the kind of beating it took. So a defensive play there. Here you are seeing selling pressure. Just going to take you through the indices which are losing before I hand off to Hersh for the specific stocks that have been moving. And here you will see, while you see FMCG at one side, look at the realty index, cracked 4% today. We should pull up the components as well, because realty is really seeing profit booking at a stupendous rate. Now, are there fundamental reasons? Could be. Finally, is the market asking, where are the margins? Bhai, theek hai, aapke pre-sales bahut achhe hain, but where are the margins? Could be, but Prestige down 8%, Shobha, Phoenix Mills, DLF, deep cuts over there. And I reckon these are on top of some of your list of names moving in the broader markets as well.
Yes, it is, Tamanna, and it's part of our conversation today in India market close as well. But just for maybe adding a little bit of context, the run-up also was equally steep and sharp. So,
Agreed.
So let's give it that credit when the run-up happened. But yeah, so and I think the sell-off also, Tamanna, is quite broad-based, and therefore something that's run up faster maybe ought to also cool down.
When the penny drops, that's when you look for reasons, right?
Correct.
So when the rose tinted glasses perhaps come off. So Nifty, something interesting to talk about. But yes, it's not that there's pain only there. The small caps are also hurting.
Mid cap is down 2%, the benchmark itself, and the Nifty small cap also down over 1.5%. So clearly it's pain across the board, except FMCG, which seems to be one pocket which is playing on its own, I think, on a field of its own. But yes, let's switch over to specific stocks actually. And again, the focus there is largely earnings and numbers. But before we go to earnings, let's pull up something like a Paytm, second consecutive day in the decline. So that one is again in focus. Management change there. You're looking at card trade down, or rather up 4.9%. Again, strong set of numbers as well as good thumbs up coming in from brokerages as well on card trade. Nomura has given it a thumbs up, so has a Nuvama. So a couple of positives coming through where car trade is concerned. So, not Nuvama, I stand corrected, Citi, if I recall right off the back of my head. Then you have a whole host of counters within the NBFC pack, PSU NBFC pack, in focus yesterday. And I want to start with some of those today as well. You look at PFC, REC, IREDA, the pain continues in some of these. Of course, provisioning draft provisioning rules coming in for project finance, continuing to hurt some of these counters. Again, the run-up in some of these was extremely sharp, and we can see the reaction today as well. Let's pull up some of the PSU banks where something like an SBI, something like a Bob, if we can do that. A Bob also feeling a bit of pain. Roughly 15 to 20% of the loan book for some of these PSUs is project finance. Therefore, a slowdown there could hurt growth, and that's probably one of the concerns where PSU banks is concerned. Bob is seeing a knock of 2%, and capital adequacy at some of these banks is also slightly on the lower side. And there is a concern where capital adequacy as well as these revised norms are concerned. Draft, of course, as of now. But let's pull up some positives. CG Power, Britannia, again, good set of numbers. Brokerages giving it a thumbs up. So there are specific pockets where the market is doing well, but largely news-led. Let's pull up something like a Godrej Consumer, a Marico, Happiest Minds, again on the back of numbers. All three of them, as well as commentary, of course, all three of them are up and away in trade. The other end of the spectrum, let's pull up a Zentech, a Fusion Micro, Lupin. Again, those stocks seeing a bit of a battering. Zentech, second consecutive day in the decline. Fusion Micro on a back of numbers, and Lupin as well. Down nearly 5% on the back of numbers as well. Let's pull up Root Mobile, DCM Shriram, Gujarat Fluoro. DCM Shriram particularly poor both on top line as well as margins as well as bottom line. Clearly seeing pressure today. But outside of that, Root Mobile and Gujarat Fluoro also at the receiving end of a bit of battering seen in markets today.
It's been a tough kind of an afternoon. I just want to pull up India VIX as well. While we've talked about the indices specific stocks, that there's a bit of a story there, and the volatility index is giving us some clues about what may be happening. If you joined in the show yesterday and this morning on India Market Open, you had Rajat Bose talking about how the India VIX movement is pointing to a bearish trend, and that really is the question, that what is spooking the markets? Is it concerns about what the election results could be? Not really what the election results are, but what is the extent of majority perhaps at this stage? Why the profit booking, and then why the sudden interest in FMCG? So we'll be talking about all of these factors. Aditya Agarwala is with us today. He is Head of Research and Investments at Investor for Edu, and Dharmesh Kant joins us. He's Head Equity Research at Chola Securities. Welcome to both of you. Thank you so much for joining us. Aditya, let me start with you. You know, your take on what's happening on the India VIX. And then what kind of a position would you take right now, Nifty as well as Bank Nifty? Bank Nifty down over 1% today.
Good afternoon, Tamanna. Good afternoon, Dharmesh. Good. Thanks for having the show. So I will take some time to talk about India VIX because this is something that we have also covered closely and have monitored. So an observation here, Tamanna, that every election year, the VIX tends to spike up as we approach near to the election results. And it has a tendency to reach levels of 30-34. These are periods of minor declines within a larger uptrend. And the VIX usually leads to a spike to levels of, as I mentioned, 30-34. This time, and we had seen this in 2009, VIX had tested levels of 34. 2014, again, VIX had tested levels of 30. And similar was the case in 2019 when the VIX just
Right.
30.
Well, can you hear me, Aditya? I think you've frozen there.
I can hear you. Am I audible now?
Yes. It was
okay.
A small glitch. Yes, please continue.
So I was talking about the trend on the India VIX every election year. Last three times when the elections have taken place, we have seen the VIX spike to levels of 30-34. This time around, the only differentiation was a lot of it was already priced in the same government retaining power. But as you mentioned, the only difference that we are witnessing for last 1 week is the fact that the number of seats with which the government will come back to power is in question, and which has led to this sharp spike in VIX this week and then the previous week itself. Having said that, now it's broken out of that 17 mark, and if it sustains beyond the 17 mark, it will head to that bear territory between 28.30 to about 18 on the downside. And if that happens, yes, clearly we will see a spike in volatility and fear in the market, which can actually lead to profit booking in, if not large caps, the mid caps, small caps. Definitely, we can see a lot of unwinding and profit taking and sharp swings on large caps and mid caps, small caps as well.
Okay, so that's an interesting sort of picture that's getting painted on why the concern. Before I come to Aditya for his picks, I wanted to get Dharmesh Khan's take, because a lot of theory is doing the rounds today, Dharmesh, and I'm just wondering how you look at the kind of volatility that we're seeing right now.
Yeah, good afternoon, Tamanna, good afternoon, Aditya, and all. So, my take is very simple. If you look at the earnings which have panned out, we did an aggregate of around 200 companies. And if you remove Nifty 50 from that and banking stocks from it, so the growth of the balance 122 companies has been only around 3% on the PAT levels. That's the aggregate I'm talking about. So the picture is not so rosy as far as earnings pan out is concerned. It is only the BFSI stocks, that is the banking stocks and the NBFC space, which has delivered 60% year-on-year growth on the quarterly basis. And there too, the NIMs are now getting stable, and there's a chance of some compression going forward into Q1 and Q2 with asset quality still remaining stable. So that's the broad picture. So my own sense is earnings trajectory itself, wanted this correction to come into the market. However, news flows are different, and the rise in risks and all is given to the election result outcome, which I don't think so, because fundamentally, I think the best of margin is behind us and the best of earnings growth trajectory is behind us. So FY25, we are anyways penciling in only 10 to 12% EPS growth in Nifty. And below that, in the mid and small cap basket, it will be 6 to 7% growth. Whereas most of the companies in the mid and small cap basket is trading at 30% or 25 plus PE multiple. So that's the disconnect which is getting adjusted in this market. I think the sharper disconnect where it will get converged will be post the election results are announced. So that is the time I'm fearing more heavier correction in market than now.
Okay, right. I want to quickly take your views with regard to the Nifty bank in particular, Dharmesh. It's funny because you've just got one odd stock in the green, something like a Kotak, but outside of that, the entire Nifty bank is sliding. I want to take your view with regard to specifically the NBFC pack within the PSU basket. Do you believe that this new draft regulation on provisioning is going to have such a massive hit, because we've seen some of these stocks decline by quite a margin over the last couple of days?
Yeah, definitely, because 5% kind of a provisioning on project financing space, and there are many NBFCs which do only this, both on existing as well as new till the commencement of operations happen, is quite harsh. If you look at it, it will have anywhere between say 1% to 3.5% kind of a hit on the tier 1 capital. So that's equity growth capital which these companies have. What was surprising was why this provision needed at this point in time when you are seeing the best of the asset quality in the business and things are moving on so far. If you want to stop, take a look into the disbursement phase itself when the project financing is done to the right companies where the NPA situation does not happen. This kind of provisioning is just to do with a kind of a situation where you are seeing some NPA development happening and to take care of that. So that is where the market disbelief came through, and sharp selling is coming in most of these companies. And fundamentally, I don't think there's any wrong with any of the banking or NBFC space, particularly the PSU and the companies which are involved in project financing. Because if you look at the numbers which have panned out so far, NIMs may be stable as slight 10-20 basis point of compression, but asset quality across the board has improved remarkably, and that speaks about the health of these companies. So it's a harsh measure if it is implemented from the RBI. I think there will be some negotiation and some, middle way being found out, and that will help these companies' stock prices to recover. Fundamentally, as of now, there is nothing alarming in most of these companies. So now the next question is whether this correction should be utilized as a buying opportunity. To that, what we have been recommending our clients is to wait till the election verdict is over, and then a reasoned call can be taken. If you miss 5% here and there, that's fine as far as the long-term trajectory buying is concerned.
Okay, the other big story, of course, and we'll get into more detail on it, the stock of the day. I want to start with Marico first, and then we'll come to what's happening with the rest of the FMCG pack and why this rediscovery of a sector that has traditionally been unloved. Let's look at Marico. Just, I don't want to say insane, but it's bordering on it, 9.5%, 10% up. Yes, the numbers were good, relatively speaking. But were they this good? And remember, we saw this yesterday with the Britannia. So we've seen that rotational play, and HUL today doing exceedingly well in trade. So a heavyweight also coming in. We'll play out for you first what the MD and CEO of Marico's Shougata Gupta said. We also spoke with GCPL's, Godrej Consumers, Asif Malabari, and I want to just pull up Godrej Consumer as well. So we're looking at these two stocks. Marico, of course, came out with its numbers in the last 20 minutes of trade yesterday. So it had some time to react, but of course, you've seen a whole host of brokerage notes today and positive views, which has pushed up the stock. Godrej Consumers, the other one, 5.5%, 6% up. Let's first listen in to what the management is saying.
If you look at this year, last year, we peaked our margin at around 21%. And as you know, that obviously there were some tailwinds as far as input costs were concerned, in addition to the cost improvement initiatives which we took. Because of our diversification, we continue to invest behind the portfolio growth, and therefore the A&P will be at a 10% level. Given that there is slight inflation, I think this in FY25, we don't see margin expansion. But if there is double-digit revenue growth, as long as the bottom line grows in tandem with that, we should be happy. Having said that, over the next 3 years, a combination of different things, whether it's the international business mix, your premiumization, and a significant improvement of the entire digital business and foods profitability, obviously the margin will continue to expand. Having said that, I think this year, as I said, because of slight inflationary pressures, I don't see absolute margin expansion. Having said that, I think we will ensure that we continue to deliver double-digit bottom line growth also.
All right. So for this year, we do not see room for much of a margin expansion.
Quarters and I would say many years of strong growth on the acquired portfolio. It will see double-digit growth for multiple years to come. And we are quite confident that the growth of the acquired portfolio should be significantly more than the overall FMCG growth. So, yeah, we remain optimistic on the acquisition.
All right. Coming to your consolidated numbers, the sales growth continue to lag behind volumes. So could you tell us if this is something that you would like to see a reversal, or would you see this trend continuing in the upcoming quarters?
So, there have been commodity deflations, prices have been going down, and we've done the right things in terms of passing on the benefits of lower commodity prices to the consumers, keeping the focus onto ensuring that we get strong volume growth and we increase the consumer franchisee.
Okay, so that was, of course, GCPL and Marico talking about their numbers, but a whole host of reasons why there is a positive sort of outlook on FMCG. Is there reason enough, though? I just want to pull up the index once, the FMCG index, and look at where it's going. We'll pull up its components as well. So pared down from in the last few minutes, I would say it was up nearly 4%. But your Marico is your big gainer, of course, and your Godrej Consumer, HUL 6% up. Dharmesh Kant, is this a rotational play or now a discovery that maybe the worst is over for the FMCG players?
Yeah, Tamanna, to my mind, this is just a rotational play because, 4-6% kind of a volume growth is still a low volume growth. If you are looking at it from a lens and expectation is that a 9 to 8 or 10% kind of a volume growth would be there, and 2 and 3% kind of a blended realization growth is also there. So it takes to be around 15-16% kind of a profitability growth. Then such kind of a bounce from lower levels, given the historical valuation multiples at which this company is used to trade, is warranted. But I don't see that situation panning out because last 2-3 years monsoons were good, everything was going fine. Still, these companies were unable to capture onto the volume growth. Blended realization has been a problem with these companies. which is reflected in this quarterly earnings as well. And losing business to local competition has been the norm so late. So what makes, I mean, this year, if the monsoon is normal or good, suddenly volume growth will come back to these companies without outlining the strategies. And we are not seeing that happening in the market per se. So it's just that a rotation, a flight to safety in the current market environment is what has happened, and it's a trade which has been playing out. It may play out for some more time. 3-5% more gains can be there individually stock-wise. But I don't see a structural shift into the positioning of these companies for next 2 years perspective. The only outlier to my mind in this space is ITC, where the bulk of the heavy lifting is done by the cigarette business, and that's the reason that companies should be doing well. And one of the key factors for that is Government of India has not tinkered with the excise duty at all in last 2-3 years. So going by that stance that there is no tinkering with the excise duty, volume growth should be there. It's relatively cheap if you look at compare it to say HUL and other FMCG plays. So 10-15% kind of an upside on a fundamental 1 year kind of a buy basis stands on ITC. Other than that, everything else looks to be a trade to me.
Okay, thank you, Dharmesh. Just from our side, top 5 takeaways in terms of what one needs to look out for in FMCG, and essentially possibly the reason why FMCG is buzzing today, just in terms of commentary. We're expecting a rural recovery in second half of FY25, and therefore likely double-digit growth. That's what Marico has especially guided for in FY25 full year. Now, given that you have that kind of traction coming from rural, you're also expecting some volume uptick to happen in FY25. That's one of the other possible reasons why you could start to see FMCG emerge as a basket which could start to do fairly well. The other piece is on the margin side of things. So where your raw material prices are concerned, they've cooled off, or rather they've stabilized. Q4 saw some of those numbers stabilize, and therefore margins, especially in the domestic market for Marico specifically, and I keep coming back to that because we've got all the commentary from that particular one, they've recovered by 260 basis points on a year-on-year basis. So you're seeing good traction when it comes to margins as well, and that likely will get better in FY25. That's the sense, that's the commentary that's coming in. Also, outside of that, urban is continuing to do fairly well. Premiumization continues to be strong, and those trends are playing out very, very well as well. So no slowdown in urban and premiumization. So all of those factors hopefully aiding FMCG stocks, at least in trade today, and maybe a possible defensive play as well, Tamanna, in a market where you're seeing a one-way street in the red. FMCG could be that place where money could be parked, given the fact that there's positive commentary.
Yeah, I mean, it's if you need a defensive play, then nothing better than large branded FMCG players. Very
Correct.
fundamentally think about it. I mean, their products are going to continue to be consumed in large volumes, and most of the management are talking about double-digit volume growths. Aditya, on the charts, do you like any of these players? A Marico today, an HUL, a Britannia? What would you do with them?
It's difficult to pick one, Tamanna, to be honest, because as you mentioned, the last couple of days, most of these stocks have shown a kind of sharp up move. And I also agree with Dharmesh on the fact that I don't see a runaway rally in these, as in it's not a case of a massive trend reversal in a lot of these stocks. It is still some time to confirm whether these stocks have turned the tide, and it's good to hold for at least 2-3 years. Having said that, yes, there are a few pockets which are looking very attractive, and I believe money making opportunity still lies in a lot of these stocks. To name a few, we can start with Marico, the first one, which is almost up 10% in trade today. And if you take a look at the chart setup of the stock, Tamanna, from October 2021, stock hasn't done much for itself. It still hasn't been able to cross the highs of October 2021. So I believe it's now on the verge of a breakout from that shallow consolidation that the stock was showing. And one can definitely look at adding fresh positions in Marico at current levels. And on the upside, I think stock can easily test levels of 650 to about 700 on the upside, with a good support on the downside at 550. The second stock on my radar is Jyoti Lab. Look at there's a sharp spike on volumes in trade today. Stock is up almost 8.5%. Again, one stock which went into a massive consolidation and now looks like it's getting up for a big up move. Jyoti Labs from here on can be added with a stop loss closer to about 420, and on the upside 530 to about 540 can be played out. And the final stock has to be an ITC, because after a sharp up decline, stock went into a lull phase and now it's showing some signs of a recovery. Today almost crossed its 200 DMA, yet to close above that hurdle of 445. The moment it does that, Tamanna, I think ITC is a roaring buy for a target of 470 to about 475 on the upside. So overall, I still believe there is room on the upside in the FMCG. One should definitely play a few stocks, more of a trading, positional trade one can definitely take here.
All right, time for a very quick break. We come back with Aditya's picks. We talk about real estate. We talk about what is the other defensive play you can look at and why this market is jittery. All of that on the other side.
Welcome back. Thanks for staying tuned to India Market Close. I want to quickly take it across to Aditya. Aditya, your top picks at this point, and what should one do?
So I've got a couple of buy recommendations. I believe after this sharp correction, there can be a short recovery in the market. So I'll go with the IT name. Tech Mahindra looks interesting on the chart setup. After a sharp up move post numbers, it cooled off and now it's showing strength again. So at current levels, one can definitely look at going fresh long for a target of 1330 on the upside with a stop loss at 1260 on the downside. The second stock is Alchem Laboratories. Yesterday was a sharp up move for the stock, and today trade is more of a sideways consolidation at the moment. I still believe there is room on the upside. It's a fresh breakout from a downward sloping wedge. So one can definitely look at adding fresh positions at current levels for a target of 5500 on the upside and a stop loss at 4950 on the downside.
Okay, so those are a couple of names which you should keep your eye out on. Dharmesh, quick take from you with regard to any specific names that you have in mind from a short to medium term perspective, given the kind of markets that we're seeing.
I think it's still from the banking space only, and the top tier banks like Kotak Bank, ICICI, Axis and IndusInd. I mean, this is a basket portfolio from the banking space, which looks good. And from a long-term perspective, I mean, 1 year perspective, we are still holding on to the plays from the railway infra like RVNL, IRCON, International, along with defense plays like BEL and HAL. So these are the few select pockets where I see a comfort still there, and we are sticking to that.
Okay, Dharmesh, one quick thought from you. We've seen LIC actually slide in terms of stock. I mean, of course, the markets have also slid in tandem, but I want to understand from that 1100 kind of high, it's now very close to 910 to 950 kind of band. Is this possibly a buying opportunity? We also understand that the government is looking to sell some stake. What should one do in your view with regard to LIC?
As far as LIC is concerned, it's a buy on every decline. It has to be accumulated over a period of time. Don't look at it from a trading point of view, because then the chances of getting a success would be slightly less. But if you're looking at this company from, say, 3 year to 5 year perspective, it's a definite clear buy. Because when you compare it with other, life insurance companies like SDFC Life, ICICI Pru Life, or SBI Life, is trading at 25% of a valuation multiple, which the other companies are trading at. Almost 1/4 on the valuation count, and still the largest company in India. They are doing structural reforms on the technological platform as well. However, they still lack the efficiency, operating efficiency I'm talking about, when compared to private sector players. But I think over a period of time, 1 or 2 year time frame, they will get there. And once they are there, then the real juice will come out, and the valuation and discovery will happen. So from that perspective, I think 2,500 to 3,000, I know what I'm talking about right now, is the fair value of LIC 3 to 5 years down the line.
Right. All right. Agam is joining us now with the latest on the F&O side of things. Agam, clearly a choppy day for the markets and a bit of concern over there, a bit of wariness. Is that what you are seeing as well?
Yes, indeed. There certainly is wariness. There's no doubt about it. And to a certain extent, I reckon that there has been a little bit of waiting in line, and at some point in time, some of the bulls are looking at just a little bit of fatigue as far as markets are concerned. Do remember that we're still not significantly away from life highs. Just about a few points shy of the 22,800 mark, and the underlying, of course, while it comes off, and even though there is a little bit more weakness in store, we have seen the Nifty recover from day's lows. And earlier on in the session, we were looking at an increase in open interest, but that seems like that's abated. Let's take a look at whether or not things have changed substantially for the Bank Nifty. And that's where, once again, you will realize that we have seen up move from day's lows. Of course, we do know that the Bank Nifty has been very weak, but again, there you have it, a decline of around 1.2%. And here's where we continue to see shots into the system being built on account of weakness in HDFC Bank, ICICI Bank, Axis Bank. A lot of these private sector banks are under pressure, weighing down on the key benchmarks. Let's move on and talk about the options market right now. And given the fact that we've seen activity shift now downwards towards 22,200, 22,300, and that's exactly where we're seeing a little bit more writing. But in terms of your overall open interest distribution picture, where now your open interest for calls has also shifted from 23,000 to yesterday. We did see a substantial amount of writing around the 22,800 mark, and now we are once again seeing an increased amount of activity around the 22,500 calls. What does that mean? For now, of course, the markets are factoring in a lot more volatility, a potential downside as far as the Nifty is concerned. And on the lower end, we continue to see accumulation around the 22,000 put. And that's where, there could be a little bit of support, but this doesn't look like a very strong one based on the kind of activity that we've seen in the last 2 to 3 odd sessions. Let's talk about stocks then. And once again, a lot of them on account of earnings is why we are seeing that buzz come through. Certainly, that's been the case for Marico and Lupin. Of course, SRF earnings awaited down by as much as 6.5%. Godrej Consumer, on the other hand, again looking at further longs. Britannia continues to move upwards. In fact, now trades at day's high today as well. And in terms of stocks which are seeing unwinding, some weakness starting to seep into Godrej Properties, Coromandel, United Spirits, AB Capital Sales. So a whole host of these counters under pressure at the moment, and also looking at unwinding. It's a day day where your broader markets certainly have seen a lot more underperformance, and the advanced decline ratio continues to be in favor of those which are moving downwards. So that's the other thing that you need to bear in mind as we move into the next few days.
All right. Agam, there on the kind of uncertainty you might see over the next few days. Some profit booking there on the realty index as well, and it's cracked a fair bit, recovered from its lows, was down about 4%, still down about 3.5% actually. And a whole host of stocks hurting there, led by Prestige. Anushi is joining us. Now, Anushi, of course, understandably tough to say what's causing the crack today, but you're tracking this space closely. We have seen a lot of excitement about pre-sales numbers from some of these companies. That's definitely the tailwind. But what are the headwinds or the challenges that investors are now looking out for?
Absolutely, Tamanna. So let me just break down what's happening in the Nifty Realty space in general. So today we are seeing about a 3.5% of a downfall in the index. Now this is again led by big players like Sobha, DLF and Prestige Estates losing up to about 4 to 8% of a downside. But it is important to note that the market sentiment in general today is weak, and Nifty Realty does follow or is a high beta play. So this is in tandem as to what the market sentiments also are. So again, it is a long play as to what are the trends emerging from that to a certain any kind of fundamental view we are building on this. Because if we are to note the overall one-year performance of the Nifty Realty, that has remained as the top performing indices, seeing about 109% return. And even if you look at the stocks, Sobha has led this pack with about 280% of a return, while DLF, Prestige all have seen about more than 100% return. Again, coming to what the analysts are recommending over here, so Macrotech, they still continue to have a positive stance, seeing about a 9% of a further upside. Well, if you look at the other key realty plays like DLF and Prestige, they are seeing about 6% of a downside potential. So let's just understand now what has happened in the quarter for the major real estate players. So we have seen key operational highlights for all these major realty companies coming in. Strong pre-sales growth momentum continuing here. Just in fact, results of Godrej and Macrotech came out, wherein they have also see this persisting in FY25 also going forward, wherein Godrej Properties sees about a 20% of a pre-sales growth going forward next year as well, and collections about a 31% growth. Macrotech developers, similar kind of a growth trajectory, which is in line in what they had highlighted last year also, about 20% of a pre-sales growth momentum year as well, and new project additions of about 21,000 crore, which was more or less similar in the range in FY23 as FY24 as well. But what remains on the watch out is again the net debt to equity ratio for the company. Considering the high pre-sales that they are making, debt levels continues to remain on a monitorable view. Increase in property prices is another factor that we should be looking out for as to how that would impact the margins for the business. But on the contrary side, so pre-sales growth momentum, as mentioned, remains on the stronger side. But what we have to see is the execution and the delivery of these said projects that is expected to happen, and the launches that they are making in the new regions as we go by.
Thank you for that, Anushi. I think property prices is definitely one headwind perhaps. Just a quick take from Aditya and Dharmesh. Let me start with you, Aditya. Opportunity to pick up any of these counters as they see a crack today, or you'd stay away for now?
Maybe just one stock, Tamanna. Godrej Properties stands out within the entire pack. Apart from that, most of these stocks are still sitting at overbought levels. I would still wait for a further correction in most of these stocks before I want to latch on to them. Godrej Properties for me still has some more upside. At current levels, one can still look at buying into Godrej Properties for a target of 3,200 on the upside, with a stop downside at 2,650 to 2,600. So Godrej Properties, yes, can be looked at more of a trading bet from current levels 3,200 to about 3,300 on the upside with the target.
All right, Dharmesh, my question is two-pointed on real estate. One, do you believe that the rates which we're currently sitting at are sustainable? That's one. And point number two, valuation wise, do you believe that some of these stocks have run up significantly? Because my key takeaway from Anushi's breakdown was that the top three, Prestige, Macrotech and DLF, the upside given by most street analysts are -6 to just about 8%. So really very little juice left.
Yeah, I mean the rate part, if are you referring to the housing loan rates, or that I did not get it right, or the pricing of the property?
Pricing per square foot rates, do you believe that those are sustainable? Because they've seen a significant uptick over the last 12 to 18 months.
Yes, surely. I mean, they are sustainable because if you look at the pre-sales, which most of these companies are doing is at the current rate, and the rates are actually going up. So every 2 or 3 month time gap, you see a further hike in the rates, and they are selling very well. I mean, DLF just now sold almost 8,000 units in the northern part of the India, and in a week's time. So that is the run rate at which the sales are happening, which I think is likely to be a trend going forward. Now coming back to the valuation part, my own sense is still, 10 to 15% kind of an upside is still there in most of the stocks, but that makes it a trading play rather than an investment play. So as Aditya also mentioned that one has to look at it from more on when the next rally commences. So I think one should wait for it. If you get a further depth, you can buy it. But for a trade, it's on. Otherwise, I do see selling limit coming on most of these stock prices from a year's perspective. Given that, the only stock which I think can still keep on giving you a better trajectory is one is Macrotech Developers, and the other is the Phoenix Mills, because of the kind of a diversified portfolio these two companies are holding.
All right. Thank you so much, both of you, for those views. Let's slip into a very, very short break. On the other side, we'll have top buy-sell recommendations, and we'll have a quick chat on Larsen & Toubro as well. Stay tuned. All right, welcome back. Thanks for staying tuned with us on India Market Close here on NDTV Profit. I want to cover one more space which has been under pressure today, which is the Nifty Metal. Now that one is also one of the top sectoral losers in trade today. Not spoken much about it. 2.5% down now on the Nifty Metal. Aditya, talk to us on charts. What exactly is happening here? What's your view?
So Harsh, I believe there's a bit of a profit taking for sure, but I don't see a significant correction in the metal packs from here on. A lot of these stocks have already corrected, be it a Tata Steel or a Hindalco or a JSW Steel. All these stocks, mind you, have entered into a bull phase, and any correction that we're seeing in trade today could be a buying opportunity. Take for example the Tata Steel. I think today's correction is a good opportunity if one wants to initiate long positions at current levels and all the way down to 160. I think it's a very good buying opportunity on the upside. In the coming time, stock can easily test levels of 190 to about 200 on the upside. Talking of JSW Steel, that is also looking very interesting to me on the chart setup. From the lows, stock has seen some bit of buying. I still believe it's a good opportunity to latch onto this correction on the downside. 840 is a very good support area for the stock. With a stop loss just below 840, one can look at initiating fresh longs here for a target of 910 on the upside. And the final one will be a General Steel. That also looks very interesting to me. Even though that is not corrected much, wait for a bit of a correction there. Maybe closer to about 880, 875 is a good entry point for General Steel. And that too, on the upside, can easily test levels of 990 to about 1000 in the near term.
And Aditya, with regard to these PSU banking counters suddenly starting to face pressure, what should one do if one is a trader at this point?
I would stay away, Harsh. Barring the one stock which stands out for me is an SBI. That only looks interesting to me on the chart setup because it's come very close to its support areas of 785, 780. I would initiate a long closer to about those support areas. Watch out for a trade to how it opens tomorrow. If it manages to hold on to levels of 790, 785, then I'll be a buyer here with a stop loss just below 780 and look for a target of 830. Apart from that, I will not venture into any of the PSU banks just yet. Wait for the dust to settle down some more and maybe then look at these PSU names.
All right. The other one that actually declared numbers was also a Lupin. If you can pull that one up, clearly under pressure. So from a fundamental perspective, of course, it's evident what's happening. Aditya, from a technical perspective, your views, your thoughts?
So it's more of a consolidation, Harsh. If you take a look at the low of the day, it's 1540, which also happened to be the low of previous few trading sessions. Stock is not done much for itself. It's just been in a sideways consolidation between 1540 on the downside to about 1690 to about 1700 on the upside. So 1700 has been acting as a major hurdle for the stock over past few trading weeks, and on the downside 1540, 1550 has been acting as a crucial support. Yes, there is a big red candle in trade today, but we've also seen a recovery from the low point of the day. So if you're already a buyer, I would recommend put a stop loss close to about 1540 in the stock and continue to hold on to your positions. If you're looking for a fresh entry, wait for a breakout above 1700, and then the stock will give you a clean move on the upside, at least to levels of 1800. Another 100, 150 point on the upside can be seen.
Sure, that's on technicals. We also caught up with the management earlier today, listening to a slice of a conversation with regard to Q4 that we had with them.
Insofar as the margin expansion is concerned, you recognize that the competition is actually ahead of us when it comes to overall EBITDA margins. So we do believe that there is more to be done to actually achieve a core EBITDA margin of 22 to 23%. And there would, of course, be spikes in that as and when a good product comes up and so on. So 22 to 23% should be, in fact, the normalized levels that we should be kind of focusing on. We have been doing exactly that. As you can recognize, there has been tremendous buoyancy on the top line in the last several quarters with the kind of products that we brought to the market. There's tremendous focus on, in fact, building up the gross margins, which comes from routes to synthesis, from, in fact, the alternate vendor strategies and the like. So overall, the gross margins have been going up. There's also a tremendous leash on overall cost itself, and that could be evident across all lines, starting from manufacturing costs to potentially your SG&A costs. Your manufacturing other expenses have come down to about 30.5% and the like. This despite the fact that there has been a tad increase in terms of R&D spends itself. So EBITDA margins at 20.5 are good, but more work to be done for sure.
All right, we'll switch focus to Infra. L&T set to announce Q4 numbers tomorrow. Revenues, EBITDA expected to rise, margins expected to fall a tad bit, 80 odd bips. Anushi is here with all that we can expect. Anushi, talk to us about two things. One, what we can expect from the numbers itself. And two, what would you be looking out for as the 2 to 3 key pieces which comes out of these numbers?
Right, Hersh. So if you have to look at L&T, the expectation is around a 13% of a revenue growth. Again, this is backed by the kind of order book that the company has enjoyed over the period, strong order inflows over here. EBITDA also about a 4 to 5% of an expansion, 4 to 5% of an uptick, but margins remain some sort of a downtick, about 10.9% compared to about 11.7%. But do note that this is due to the low margin orders taking place, which are going to be executed, which can lead to this margin pressure that we are seeing. Again, net profit about a 1% rise, so mainly they're expected to more or less remain flat. But key things that we should be watching out for is, one, the company has had a strong order book trajectory in overall Q4 and FY24 as well, which should support the kind of revenue growth that we are seeing in the near term as well. Again, what needs to be watched out for is the management pointing out to some slowdown in the order book for the next quarter, seeing the impact of elections in this quarter and in this quarter going forward. Again, margin pressure will this persist in the next quarter as well, as per various research we are seeing that lower margin legacy orders are to be executed in the first half of FY25, which will lead to some kind of a margin pressure as well. Again, now this is important, is the company's overall outlook on basis of their orders and both the kind of growth that they are seeing in the Saudi Arabia business, like the Middle Eastern side, which has remained on the stronger part, wherein they are seeing significant number of orders coming in. So are we seeing a similar kind of growth trajectory, especially in the green hydrogen space that the company ventures into? Also, what remains on the watch out is the company's FY25 guidance that they put out every year. So again, it's a comparison on basis of FY24 stands. Now, looking at some of the key analyst recommendations over here, 31 continue to have a buy rating on this one, while 3 have a hold and 2 have a sell rating. So overall, if you look at the 12-month price target, that stands at about 3,964, which still showcases about a further 14% of an upside. So again, L&T remains in focus in tomorrow's trade.
Okay, L&T in focus for tomorrow's trade. Dr. Reddy's also, numbers are expected from Dr. Reddy's, and that's another one that we should watch out for. Just a quick view from Dharmesh Kant on both those counters, L&T and Dr. Reddy's. And we'll take Dharmesh's take in just a second, but let me come to Aditya Agarwala on that. On both the counters, what would be your call, Aditya?
We'll talk of L&T first. Tamanna, an interesting observation here. If I flip it to a weekly chart and I plot a 20 DMA on L&T, this is the first time after July 2022 that the stock is trading below its 20 DMA, 20 weekly moving average to be precise, which is a sign of weakness. And overall, it looks like there's a distribution pattern that I see on the chart setup. So I believe there is a bit of weakness in the stock, and the stock can slide further lower to levels of 3,300 to about 3,250 on the downside. That is where the key supports lie for the stock. So if I'm looking to buy the stock or a fresh entry in the stock, I will wait for a decline closer to about 3,300, and then I'll be interested in buying the stock. At current levels, I will just still wait it out and see how the stock behaves tomorrow. On the upside, clearly 3,600 is a hurdle. If you already hold it, then maybe put a stop loss closer to about 3,300 and continue to hold, or maybe add further closer to about those levels. Now, talking about Dr. Reddy's, a very interesting looking chart setup. It had broken out from a falling wedge on good volumes, and then kind of the move just stalled there, and then it has entered into a sideways consolidation again. I'll closely watch out for 6,400. It's a no trade zone, Tamanna, at the moment. 6,200 on the downside is a support, 6,400 on the upside is a hurdle. If the stock starts to trade beyond 6,400, I'll definitely look to go long on the stock with a stop loss closer to about 6,250 on the downside, and look for a target of 6,700 on the upside. So between the two, I prefer a Dr. Reddy's for sure. Just that I'll wait it out for a trade above 6,400, and then I'll go aggressive long on the stock.
So aggressive long on Dr. Reddy's, that's important. The numbers will be out later this evening. In fact, if you want to tune in and listen to what the management is saying on the numbers, you will see that at 7:30 p.m. or thereabouts on NDTV Profit. Of course, we'll have a slice of that for you tomorrow morning as well. So Dr. Reddy is on the radar. I just want to get your view, Aditya, on a Bajaj Auto, Tata Motors and M&M. Let's just look at the auto pack. maybe you're seeing that rotational profit booking, frankly, and that's what's happening with the auto pack, like perhaps with real estate as well. But on a Bajaj Auto, are you seeing an upside there? I mean, post the new Pulsar launch, there was a bit of excitement. Is there more to go? And I'm just trying to take it further from this whole rural revival theme. If that's working for FMCG, then it should, in a sense, maybe move forward and work for two-wheelers as well.
You're right as far as the rural play is concerned, but if I just clearly look at the chart setup, Tamanna, I believe there is a selling pressure in Bajaj Auto, which is likely to continue in the next few trading sessions as well. Rather than a buyer, I would be a seller, Tamanna, if the stock breaks this immediate support of 8650, 8700. That is the immediate support level. It's already trading below 8700 as we speak. If it breaks 8650 further, I think there's an opportunity to go short on the stock. For a target of 8130, 8150 on the downside, because clearly I see a distribution there sitting at extreme overbought levels, negative divergences on multiple time frame charts. So overall, it's not looking like a very healthy chart setup. Yes, after a
we seem to have lost that line with Aditya. We'll try and get him back. A bit of a technical sort of stuck there. That feed seems to be stuck. We'll get him back. All right, let's look at your top gainers on the BSE 500 and what's making those smart last-minute moves. Jyoti Lab, one of them for sure, up about 11%. It's all about the FMCG play today, and you would have seen those Nielsen flashes on your screen. Talking about how rural revival is being seen in the last couple of months in the FMCG space. And no wonder you're seeing a Marico, Godrej Consumer, HUL, Dabur, India, Imami, all of them on top of that play. Even a Westlife Food is recovering fairly well. It's all about the consumption pack today, isn't it, Hersh?
Absolutely. The consumption pack is what's dominating. Also, we spoke with something like a CG Power, Tamanna. And that one is up and away. In fact, the top gainer on the Nifty mid-cap 100, very close to close and 4% higher on that one. Nykaa is holding up fairly well as well. Of course, largely within that FMCG consumption kind of basket, but doing fairly well for itself. As we speak, you also have something like a Jubilant holding up, Sona Comps. So Select Auto also seems to be doing fairly well in trade. But Tamanna, over to you for close.
Yeah, just a couple of minutes, a minute and a half actually left to go on a closing of a day which saw, I would say, midday jitters coming in. And you're looking at over 0.5% down for the Nifty. Not near its day's lowest point. Let's just pick up the line graph for the Nifty and see where the day's low was. So 22,300 over there, and not at the day's low, but not looking great either. So you've had a rocky day to say the least. 140 points down on the Nifty. The Sensex also weakening. And the question is that what really is worrying the market? Seems to be a combination of factors. You could see some poll jitters perhaps after most of phase 3 is done. Because remember, phase 3 very important for the BJP to hold on to the seats that they won out of the 93 seats. Just to give you some perspective, because if election plays what's happening, so then this is why phase 3 was important. Out of 93 seats in 2019, BJP won 80 of those seats. So they need to hold on to those. Perhaps that's what the concern is, that are we going to be seeing a 400 plus target that the BJP and the NDA has set, or maybe closer to 320. India VIX I saw on the screen. We should pull that up and just give you a chart as well of India VIX. So up about 3%. And yes, it has been rocky. It has been rocky. It has been an up and down kind of a motion for the India VIX. It's showing a bit of stress over there, our highest point in the middle of the day. I want to pull up the line graph, the advanced decline ratio of the day as well, to show you what kind of a volatility we saw. And yes, that gap widening, but towards close, and you're nearly at close, a 1:5 ratio with the declines outpacing the advances quite clearly. Let's pull up the heat map just to give you a sense of what has really hurt today, even as we're looking at the market close, and it's largely Bajaj Auto. We should also pull up the Nifty contributors, because today this top row belongs to FMCG and IT. Traditionally, you could say it's defensive if I throw in a pharma there as well. But FMCG and IT, it is. HUL, the top gainer of the day, up about 5%. Put that down to first signs of a rural recovery. Hersh, and I think that's the large story. The biggest FMCG gainer, not on the Nifty heat map, that is Marico. But one way or the other, you have seen, completely an FMCG kind of day. HUL, ITC there on the top, and so is TCS and Infosys. On the losing side, the banks continue to pull down the market, but the private banks this time, yesterday, was the public sector banks. But if I were to broaden that story, even a Godrej Consumer, a Marico, an Imami, a Colgate, all of them firing today.
Absolutely. I think the trend is playing out across the board and very visibly so. And the commentary too seems to be applicable across the board, despite each of those not coming out and stating it. But it seems the positivity for FMCG is here across the board and it's quite secular. But let's pull up the broader markets to close off. The Nifty mid-cap under just as much pressure, 2% lower. We saw the advanced decline, and that's reflective of what's happening in the broader markets. The Nifty small cap too down almost 2%, 1.8 odd percent. Let's pull up the BSE 500, check out where we've closed at on some of those names. But some of the top gainers, especially on the mid-cap, CG Power has done fairly well. And it'll come up once the BSE 500 comes up. There you go. Jyoti Labs, of course, in the small-cap space has done exceedingly well. And then you have a host of FMCG counters there. And you have CG Power standing out amongst those counters.
Yeah.
Finolex has done fairly well as well for itself. But among the losers, look at MRPL, second straight day of declines. CAT among the tire stocks under some bit of pressure. But outside of that, no particular sector, industry.
Realty, I would say. Realty, if not in the top
yes.
BSE 500, but if you pull up the sectoral indices...
Realty was the standout.
Realty is the standout
yes.
one with the pain, and Sobha and Prestige, Sobha, Prestige, Macrotech all leading that pack is perhaps what I would say. Yeah.
Well, absolutely. And we're out of time on India Market Close. From Tamanna, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.